Hey, how's it going, everybody? Welcome to Finance with Avon. In this video, I want to talk about 3 of the stocks that I bought the most in October 2023. Now, I like to buy stocks throughout the year, dollar cost average, no matter what's going on in the market. But when there's a lot of volatility, a lot of fear in the market, I like to increase my positions in certain stocks or buy more of certain stocks. Or that's sometimes when I'll start a position in a stock again or start a new position. So in October 2023, last month, there was a lot of volatility in the market, and I like it when it's like that. Honestly, like as long as nothing crazy, of course, is going on in the world. I mean, well, there's always something crazy going on in the world, wars and pandemics and different things. But I'm not like rooting for any of that, of course. But like as far as the stock market, this is what this channel is about. Personal finance, investing. But yeah, so last month there was a lot of volatility in the stock market for various reasons, and the fear and greed index was at extreme fear a couple times. I actually went there in September, towards the end of September. I made a video on the fear and greed index explaining it and how I use it. Check that out if you're interested in it. I'll leave a link in the description. There's a lot of fear and extreme fear going on in the market. The VIX, the volatility index, was over 20 at some points throughout the month. And so, yeah, I bought stocks. I mean, like I told you, I buy stocks every month, but I went in a little bit heavier than normal on 3 stocks specifically. And these aren't like large positions. Like, I'm a middle class guy and I have a family, so yeah. I'm, investing when I can and also saving when I can. You know how it is. If you can relate to that, you can relate to that. If you can't, just believe me what I say. I guess, yeah, I'm investing. Not a ton of money, not a little bit of money. I'm investing for sure. Yeah. So these are all long-term positions. Let me make that clear too. And these are all in my taxable individual investing account. I did buy some ETFs in my Roth IRA. But this video, I'm just going to talk about individual stocks. So yeah, but now I'm going to break it down and go into more detail about the 3 stocks that I spent the most money towards. And first here, it is Google. Parent company Alphabet, ticker symbol GOOGL. Now, there are, of course, a couple of different ticker symbols for Alphabet. There's GOOGL and GOOG. The main difference is one of them has voting rights and the other one doesn't. GOOGL is the one with the voting rights. But yeah, that's the one I own. It's one I've owned before. I've been in Google before. Got in before the stock split. And of course, it's ran up. Google's had a fantastic year. Year to date, it's up about 50%. For the past 3 years, it's up around 50%, 49.63%. Lifetime of the stock up over 5,000%. So Alphabet, Google is one of the magnificent 7 stocks. The stocks that have been pretty much carrying the stock market this year. As of closing on November 10th, S&P is up 15%. Exactly, it looks like right there. And part of the reason why the S&P is up so well, the NASDAQ's up so well, is the magnificent 7 stocks. You've got Amazon, Google, Alphabet, Meta, Facebook, Apple, Tesla, Nvidia, and Microsoft. They make up a large proponent of these indexes and several ETFs, main ETFs that follow these indexes. And so that's why the market's been up. There's a lot of stocks that have been beaten down this year, but you kind of don't notice it unless you're in those stocks or you pay attention to certain news or, articles, things like that, because the Magnificent 7 have been kind of carrying the market. And they had a little rough spot in October, and that's where I stepped in. Alphabet right here. Yeah, you see that drop right there in Alphabet and went underneath its 50-day moving average. So I started kind of loading up the boat a little bit in Alphabet Google. I wish I could have bought more for sure. I always wish I could have bought more of a lot of stocks when I get into them, because turns out sometimes it ends up being well. This is a position I definitely want to hold long term. I'm not going to be doing this, oh, it's up a good amount and I'm going to sell it. And there's some points in my life where I was like, I needed some money for something, and then I would look at some of my winners and sell them. And Alphabet is one I should not have definitely done that too. I would have been up even more. Even with this drop, I still would have been up very nicely. And this drop this wasn't a crazy drop. I mean, yeah, it was trading up to around $140 a share, and we got down to like low 120s. And so, yeah, I started stepping into Alphabet Google for sure, and it's just a fantastic stock. And with Google Alphabet, my average cost right now is $125.94. So I'm up right around 5%. Like I said, I'm pretty new back into this stock. I've had it before, but that's my current position and what my return on it so far. I'm not selling anytime soon. But if I were, that's what I would gain, 5%. But I'm holding on to this one long term for sure. I want my position in Google Alphabet stock to be in my top 10. And that's saying a lot, because all of the stocks in my top 10 currently pay a dividend. I'm a very big dividend investor. Dividend growth, dividend value, all of that. So Google Alphabet is going to be my top position in my portfolio that doesn't pay a dividend. And honestly, it's my favorite stock that doesn't pay a dividend. And that's not saying it won't ever pay a dividend. It's a great stock that doesn't pay a dividend. 5 years from now, 10 years from now, it may start paying a dividend. Who knows? A couple years from now, 20 years from now, I don't know. But it's definitely in still growth mode. And a lot of technology stocks are still kind of in growth mode, but they pay a dividend. You got Microsoft has a little bit of a dividend they pay. I believe it's like around 1% or under there. What is that? Their yield, yeah, it's like 0.81%. Apple pays a dividend. It's around, I should know this one. I actually own Apple. I've been in Apple for a long time. It's actually my top position in this portfolio. Yeah, Apple pays a 0.52% dividend yield. So this is not much, like as far as like a yield compared to, I won't say standard dividend stocks, but blue chip, typical dividend stocks, around 2, 3, 4%, of the dividend yield, sometimes 5, 6, depending on what's going on with the share price and everything, but we won't get into that. So yeah, big technology companies can definitely pay a dividend. Nvidia even pays a dividend, I believe. I think it's even smaller than Microsoft and Apple. Yeah, 0.03% yield. So it's just saying, hey, you can pay a dividend, and these are dividends that are going to be growing, So Google Alphabet doesn't pay a dividend yet, but basically what I'm just saying is that it's my favorite stock that doesn't pay a dividend, but it definitely could eventually pay a dividend. But I want to get in, definitely have a nice position before that starts. And I'm not buying it for the potential dividend. I'm buying it for the growth and for its fantastic balance sheet. This balance sheet is amazing. Good grief. This is one of the best balance sheets it has to be in the stock market and in the companies in general. I mean, this doesn't even do it justice because you can't see all the details right here, but look at the assets, look at the liabilities, look at the debt. They could just pay that debt off just like that. They could just snap their fingers basically and pay that debt off if they wanted to. So yeah, Alphabet, Google, amazing balance sheet, amazing company. Like they're involved in so much. They have #1 search, Google. I think the #2 search in the world is YouTube. Guess who owns YouTube? Google Alphabet. Also, they own Android. Android, if you don't have an iPhone, there's a chance you have a phone running Android. They are in a lot of places. Google owns several companies, and they're investing in several companies. A very forward moving company. And I mean, look at the revenue growth. Look at the gross profit right here. Just growing year over year, double digits. They're supposedly a huge company. The market cap. What is the market cap? Google 1.6. What? I was tripped up over my word. 1.64. Go back. Hold on. Stop. $1.64 trillion market cap, and they're still posting financials like this. It's amazing. Yeah, a little single digit right there. Look at these double digits growth year over year. Just, of course, the cost is going to go up, and sometimes you see that. Yeah, but look at the gross profit. Look at the revenue. Look at the net profit. Little year over year tumble right there. And they recently reported beat earnings. Recently, you see how they're just beating earnings, forecasts, you see the reported. And as far as like the analysts, I don't always just go with whatever analysts say, like, analysts think the stock's going to double in a year, buy, but I do like to look at the analyst forecast for stocks for sure, just to kind of, see what's going on here, what's the possible and what's the reasons behind it and everything. But let's get to their analyst recommendations here. It's a buy recommendation overall based on 53 analysts on MSN Money right here. So you have a 12-month price target of $153.33. Now over on tip ranks, I like to look at them as well over here in this website. They have a strong buy analyst rating with 32 ratings, a highest price target of $180, average price target of $150.67, and lowest price target of $126, which it recently was right around that area, actually underneath that. And over here on MarketBeat, another nice website I like to use. Of course, you see the analyst moderate buy right there for that. 10.8% potential upside, healthy on the short interest, and only 0.33% of shares are sold short right there. And of course, some people might say, oh, if you got a lot of short interest, that means the stock could run up, it's going to get a short squeeze. And yeah, that could happen sometimes, but a lot of times when there's a lot of short interest in the stock, there's a good reason for it, because they're short in the stock because they want to make money, because they think the stock is going down or going really low, maybe even going to zero. But yeah, Alphabet, Google, very short interest, so yeah, there are definitely not a lot of people thinking this stock is going to tumble and everything. Yeah, they can hold up. It could tumble. It tumbled recently, but it's going to hold up well overall, I believe personally. Insider selling, there has been some of that, which is something that I do look into. I don't look into it too much. I put more emphasis and more attention to when insiders buy than when insiders sell. Typically, insiders buy for only one or two reasons. They think the stock is undervalued, or they want to show strength and confidence in the company because they know what's coming up in the pipeline for them, or what's going on underneath the scenes, underneath the hood, in the engine, whatever. And when it comes to insider selling, insiders can sell for a myriad of reasons. They want to buy a new house. They want to go on vacation. They want to pay for their kids' school. Various reasons. And there's chances are when they're selling, they still have a load of shares still of the company. Maybe they want to diversify more and buy shares of another company. So yeah, various reasons of selling. It's still something just to, notice. You see, did they sell their whole position? Look into that. But that's how I compare insider selling with insider buying, basically. So projected earnings growth of 16.03% right here. That's what a stock right here. And just looking at the ownership of it, institutional ownership, it's kind of been a little bit more selling than buying of the stock. So net sales looks like, as far as this past previous quarter of this year, 4.63 billion bought, 5.2 billion sold. Before that, 25 billion sold, 11 billion bought. There's still a ton of money, of course, going into Alphabet, Google for sure, but there's some selling going on for sure. I mean, and over here, MSN Money says this quarter two is an increase of 1.2% from the previous quarter. So you see here, there's a stock split over here in 2022, but and maybe that's the reason why it's kind of the institutional ownership looks so different right here. Not really for sure about that, but yeah. So large, definitely institutional ownership. Not a lot of movement going on right there. A lot of people have a ton of Google. I mean, it's in a lot of ETFs. So yeah, Google, Alphabet, one of the stocks I bought the most of in October 2023. And my plans for that stock, like I told you, it's long term. I want to build my position even more in the stock. I want it to be in my top 10 holdings. Right now, it's not close to that, but I do want to get it up to that. And I'm going to just continue dollar cost average into it. And I know it's near its 52-week high range. Yeah, 52-week high of 141.22, 52-week low of 84.86. So yeah, it's trading near that high range. Like I said, it's had a great year. I was hoping for another pullback, or this pullback would stay down lower for a while. Price to earnings ratio of 25.45. Not bad at all for a growth stock like this. And of course, typically sometimes people say, get under 20 PE, that means you're undervalued or a value stock or something like that. But you can also look at the history of the PE versus the share price, which I'm trying to make this video not too long, so I won't get too much in that. I want this to be more of an overview kind of video, so I won't dive too deep. And another reason why I will remain bullish on Google Alphabet stock and hold it long term is because of this. Yes, as you see on the screen, Sergey Brin is back at Google Alphabet. That was actually like months ago, back in July. He is one of the founders of Google Alphabet. And it's not like he needed to come back because the company's struggling. I mean, you saw the stock price this year, and you see the financials. They're not struggling. Yeah, companies are going to have hits and misses here and there. And a company like Google is like similar to like Amazon and Microsoft. They'll work on something, throw millions of dollars at something. If it doesn't work, they don't mind failing and moving on and learning from that. But yeah, that's not necessarily what's majorly going on at Google. But Sergey Brin, one of the founders, is back to work on AI with them, and that is major. AI, you've seen the headlines. I don't need artificial intelligence. One of the reasons why the Magnificent Seven ran up this year for sure. Definitely NVIDIA. So right now, probably NVIDIA, maybe later, Microsoft's making some major moves in AI as well. And I think Amazon is going to, and Google Alphabet definitely is going to continue to. So yeah, that looks like the main reason why Sergey Brin came back is to work on AI. And that is very interesting. And that's exciting. Like, I don't work at Google or anything. This is not sponsored by them or anything. I'm going to try to shorten this, but maybe the longest stock I'm going to talk about in this video, because it's the one I'm most excited about, because I just recently got back in. Like I said, I've been in Google Alphabet before, and I sold for some profits, but I'm back in it. I'm going to hold this long term. I'm going to ride the waves up and down and continue to dollar cost average. But yeah, this is really exciting. Sergey Brin, back in July, made the headlines, coming back to Google to work on AI, one of the founders. And guess what also he is? He is the largest individual shareholder of Google stock. Largest individual Google shareholder, owning 367.31 million shares, representing 2.93% of the company. And when this article was published right here, it says it was currently valued at $48.70 billion. Yes. And that is major. Like, as you see right here, these are the top Google shareholders, including institutional shareholders. So you see Vanguard at the top, Vanguard, BlackRock, major, State Street. Oh, and there he is right there, Sergey, at 2.93%, number 4 on the list right here, according to this ranking of the top shareholders of Google stock. That is major right there. He's up there with the institutions. So yeah, when you have somebody like that, a founder coming back to a company who's also heavily invested in the company, not just mentally, financially, he's going to look out for what's the best for the company, even if he was just in it mentally and a little bit financially, or vice versa. Typically, people like that, a very intelligent human being like him, yeah, I've got a lot of confidence, even more so. I had a confidence in Google Alphabet before that announcement, but when I saw that, I should have actually went in Google stock then. I don't know what I was thinking. Probably spread too thin going into other stocks, because there's just, like I told you, there's a lot of value going around in the market, and it could continue definitely. And next year in 2024, with the recession looming and rates and this and elections. So yeah, I'm not saying the market's going to shoot up and continue going to this, bull market or whatever, everything like that, but in all these 3 stocks I'm talking about for sure. But that just gave me even more confidence in Google Alphabet stock. So yeah, those are some of the many reasons why I will continue to hold this stock long term and add to my position. That is Google Alphabet. the first stock I want to talk about here, and probably the safest of the three. I'm not saying the other two are not safe, but this one, like I said, with that balance sheet, those financials, just excellent, just great, just great. So yeah, Google Alphabet is the first stock I bought the most of in October. And let's go over to the next stock here, and that is Discover Financial Services, better known as Discover. You've seen the card, you've seen the logo, one of the largest financial institutions in the United States. Ticker symbol DFS, trading currently under their 250-day moving average. For the year to date, Discover has been taking a hit. They're down 14.64%. A year overall, down 22.9%. For 3 years, up around 9%. 5 year, stock is up about 18%. Lifetime of the stock, up 193%. So yeah, they've definitely taken a hit this year, and that's one reason why I started getting in this stock and I really started building my position. And with Discover Financial, my average cost is $85.76. So I'm down about 3.21% currently, but I'm not going to be taking a loss. Definitely, I'm going to hold this position long term, and I'm going to continue building to it. And actually with Discover Financial, I think I want to place this one in my top 10 as well. I have one other financial company in my top 10 currently, Bank of America, ticker symbol BAC, and I've had it in my portfolio for years, and I don't plan on selling out of it. I want to add more to it as well, but not as aggressive as I want to add to Discover, because I have a nice size position in Bank of America. Not like nice as far as like I'm done investing in it, but for where I'm at right now with this specific portfolio, I want to add more Discover than Bank of America, but I do want to add Bank of America as well. I've been adding Bank of America in October, so yeah, I'm still doing that. But yeah, Discover. So Discover is one of the largest credit card companies. They kind of market more to the middle class, whereas Visa is almost like everybody. American Express is more upper class, middle class, in between there. And Discover, they've taken a hit recently. Their earnings, they take a hit on their earnings for sure. You see their earnings right there. Surprise, negative 18.30%. Reported $2.59 earnings per share with a consensus forecast of $3.17. So yeah, they have been missing earnings for this past year for sure. So you see that. So that's where they've taken a hit. I mean, but this is a stock I think could definitely recover from this. And a lot of negative news is priced into this stock. Not saying it can't go lower, but I think a lot of negative news is priced into this stock already. You can see where it's trading and how it's been taking a hit. It may stay down here for a while, the rest of the year, for another month, another year, who knows? But I'm just going to continue adding to this position. It has a current market cap of $20.88 billion with a price to earnings ratio of 6.13 and a dividend yield of 3.38%. So an annual dividend of $2.80 per share. And that's one reason why I do like the stock. They do pay a nice dividend. I'm going to talk about that a little bit more. And as you see with the institutional investing, something I kind of like, it's been on a decline somewhat, not super major. There's not nearly as huge a position in this as Google Alphabet. That was like what, $3 billion in institutional investing. This is still a lot, around $200 million in institutional investing, and that it has been going down quarter over quarter. A lot of people have probably been seeing these financials and seeing what's going on with this company and kind of spreading money around some. So it has definitely taken a hit, and that right there probably could be, definitely an indicator and a reason why the stock price has been declining. There has been a selling of the institutions. And on the MSN Money, for the analysts, 23 analysts on MSN Money with an average recommendation of buy, a 12-month price target of $105.57. And let's look over on tip ranks. We have a 17 analysts right here, moderate buy on the analyst rating average, a highest price target of $137, average price target of $102.24, and lowest price target of $90. So it's trading underneath that lowest price target right there. Potential upside of 22.43%. That's just from the average price target. Like I say, I don't take everything the analyst recommendations for, just 100% like this is going to happen in 12 months. But it is something I do look at, part of all the analysis and research I do on the stock. And over here on Market Beat, let's look at this one right here. It has a potential upside. It's that price, based on that price target over here, is 26.7% upside, just based on the analyst recommendations they have. Short interest is healthy, 1.80% of the float sold short, so not a ton, just 1.80% of the float. And dividend strength is showing strong right here, which I want to go into this a little bit more. Their dividend yield run at 3.38%. Nice dividend yield, higher than the bottom 25% of all stocks that pay a dividend. Discover has been increasing their dividend for 13 years. With their dividend coverage, they can afford this dividend, looks like, because their dividend payout ratio is 20.77%. So that's a nice payout ratio. It's not showing, with a percentage like that, it's not showing that they're having a hard time paying their dividend or they're using a ton of their cash flow for dividends or anything like that. The payout ratio is healthy, as it's stated right here, at a sustainable level, below 75% for market beats what they're saying. I like to see below 50% for a company like this, and it's below that. Just depending on what kind of company it is the kind of dividend payout ratio I kind of look to see. Oh, is the dividend in danger? Is it fine? Is there room for growth? So there's room for growth for sure with this dividend. Could be a dividend growth stock, and it could be a dividend value stock as well. But that is how I'm kind of approaching this stock. They stated Discover will have a dividend payout ratio of 22.19% next year, and will be able to sustain or increase its dividend, as I was stating. So go up slightly right there on dividend payout ratio, still very nice. And so, yeah, right now it's trading near that 52-week low, 52-week low of $79.04, 52-week high of $122.50. So as I stated before, I'm going to keep adding to this position and Discover, ticker symbol DFS. Now I'm going to go to the next stock, which I bought a lot of in October, and that is Disney, ticker symbol DIS. Yes, Disney. Let me see where I'm at on Disney right now. I think I'm up a little bit because I started my position under $80. Now my current average cost is $80.26. So I'm up about 9.92% currently in Disney. I'm not selling, so I'm not taking that gain, not realizing that gain or that profit or anything. I am going to be holding this long term. Not going to place this in my top 10 like the previous two stocks I talked about in this video, but I do want to increase my position in Disney for sure going forward and just continue. I would like for it to stay under that 80 more because it could go down lower. I mean, I'm not saying this stock is just going to go on a rampage and it won't see below 80 again, but I wish it stayed down there a little longer so I could keep adding, but I'm not going to be super aggressive. It just popped up recently because it did a really good job of cutting costs, and that's one of the areas they've been focusing on, is cutting costs and that Disney Plus subscriber growth. And they had some good, earnings details and some good guidance. They increased guidance as well. So they have, the stock ran up a little bit, I believe. Let's see. The 5-day, yeah, it popped up right there. You see they were trading around that mid 80 or so, and it popped up around 90. It came back a little bit some, but not back to where it was previously before recent earnings. For year to date, Disney is down. Oh, actually, what? I thought they were down. Oh, they've taken a dive. They were, because they started kind of down, but then they went up. But yeah, year to date, so they're actually up 1.60% year to date. For the year though, they're down 2.42%. For 3 years, there it is right there, down 36.20%. 5-year down 24%. Lifetime of the stock up over 8,800%. So yes, Disney has taken a beating the past couple of years. They brought back Bob Iger, which is the previous CEO, to try to straighten some things, get some things back in order and everything there. So I think they will eventually get it together more. And these recent earnings did show that they are approaching that. Yeah, so currently it is trading underneath the 200-day moving average, but above the 50-day moving average right there. So we don't know if we're going to see like a golden cross or what's going to come up or with this stock right now. And with the financials, you see the financials, they have some double-digit year-over-year growth with the revenue and some single-digit there. Like, their financials have been hit and miss in certain areas for sure. One of the things with Disney is their brand, what they own and what they have. Just Disney. Like, their market cap is $161.51 billion. If I gave you that money right now and said, go make another Disney, could you do that? And I know some people are like, yeah, sure, of course I could. Could you really build what Disney has built? And not just saying the parks, could you build them? Like, maybe you could build a park or something, could you build a brand behind it? You have Mickey Mouse. Do you have Star Wars? Do you have Marvel? Do you have Pixar? They are a brand, they have to be one of the strongest brands in the world, like as far as brand recognition and brand value. That's one of the things you're buying when you buy Disney stock, is that brand value. And that's one of the things I think of when I buy it. So I do give it a little bit of leeway, some areas that I probably shouldn't because of that brand value. I do give it a little biasness, I must say that. Because PE ratio of 70.21, so the highest of these three stocks I'm talking about, and high in general. As far as, probably got the highest PE of all the stocks that I own, honestly, that are profitable, because I do own a couple stocks that aren't profitable yet. But yeah, and so let's get into the analysis here. On MSN Money, have 32 analysts, average recommendation of buy with a 1-year price target of $104.85. Tip ranks here, 24 analysts, highest price target of $122. Average price target of $106.86 with a potential upside of 21.06%. Lowest price target of $71. And Disney eventually, they don't pay a dividend now. They have paid a dividend before years ago, and they have stated that they're looking to go back to paying that dividend eventually. So, and judging off the financials and everything, what I've looked at, it may only be like around 1% yield when they start it back up, maybe lower than that if they want to play it safer. But eventually this could turn back into a dividend growth stock right now. So that is, I'm kind of not really buying it for that, but that is going to be a plus, I think, eventually. A Disney plus. So, gosh, yeah, I know, I'm a dad. All right, so I don't even know if that wasn't even really a dad joke. It was just a dad dud, I guess. But anyways, so yeah, Disney right here, potential upside on market beat with their analyst expectations and everything, 28.4%. Healthy short interest, only 1.10%. I'm actually surprised to see there's not more short interest in Disney, consider how beaten down it's been. Maybe, I'm sure it was higher at one point and it's kind of came down. So people have, covered their positions and everything and said, okay, I think it's taken enough of a beating. So yeah, that is kind of interesting and good to see that the short interest is not that, it's healthy. It's not bad right there. It's healthy based on market beat and their analysis, but it's only 1.10%. So that's nice to see considering what's been going on with this stock. And projected earnings growth of 24.57% from 4.68 earnings per share to 5.83 earnings per share. So that is nice right there. Disney's institutional ownership, because this is very interesting. Look at the number of buys compared to the number of sales in the last 12 months. It's kind of close right there, 2,169 buys, 2,000 sales, with the inflows 57.24 billion. That's what you want to look at, the number of sellers versus the number of buyers. That's good to look at, of course, but it also depends on how much they're selling or how much they're buying. In this case, there is definitely more buying of Disney stock than selling. The most recent quarter in 2023, 1.90 billion bought, 1.21 billion sold. The quarter before that, the second quarter of 2023, $43 billion worth of stock bought and just 4.56 billion sold. Yeah, before that, more bought than sold. But there was a big jump right there in the second quarter. There's still more buying than selling with institutions of Disney stock. And so, yeah, Disney currently, their 52-week low is $78.73 and a 52-week high of $118.18. So they're definitely trading near that 52-week low. All right, and that is it with the video, everybody. I hope you all enjoyed it. If you liked the video, make sure you tap the like button, subscribe to the channel if you're not subscribed already. Thank you if you are. Thank you if you already liked it. If you liked any other videos, you all are awesome. Hope you all enjoyed the video. Take care.